Alright, okay, good evening everyone. Welcome to today's session over here. So before we begin, I'll just do a quick disclaimer that since we're talking about the markets, I'll be highlighting opportunities and I would say trade setups that you can look into. Just want to very quickly mention that while we're covering all this, they're solely based on educational purposes. And of course, if you're interested in following some of these trade ideas, just bear in mind that trading involves risk, right? And you have your proper risk management plan in place. Now, other than that, if you guys have any questions or you have any particular instruments that you'd like me to run through, talk about it, feel free to utilize the chat, right? So you can put it up on the chat over there. If you have any questions regarding trading, anything about strategy, um, feel free to do that, right? Now, the techniques I'll be sharing with you and using in my own analysis and trading is a combination of Elliott wave principles plus the SMC, right? So for those of you who are not familiar with SMC, it's basically smart money concept, right? Or some of the traders would call it ICT. So I'll be combining this two principle and kind of like utilizing the framework that I always share about, the DST framework, the direction, setup, and context to put into the market, right? Because at the end of the day, if you kind of break down what will constitute to a profitable trade, it boils down to three elements, right? What's the high probability direction? What's the entry criteria? When to get in, when to get out? Timing, and lastly is the context of the trade, right? What's the multi-time frame alignment? What's happening in the market? And we kind of put those together, increase the odds of the trade being profitable. Okay, so I'll run through the main instruments that I'm looking at, on a regular basis. I may not cover everything, but as I mentioned, if you guys have any other instruments you'd like me to talk about or questions, just put it into the chat. Okay. Now I'll start off with the dollar index. So if you look at the chart and screen, there are a couple of things that's going on. Of course, there's the main chart, and then you would see a table, okay, which would have the information about primary sequence, expectation, and trade plan. What's that? Primary sequence is essentially the 4-hour overall trend, whether is it bullish, bearish, or neutral. Expectation is basically what I'm expecting the market to develop, what I'm expecting the market to do. And then trade plan is essentially, if there's something that is worth noting, that's what we'll be looking out for. Okay. So for dollar index, what we are looking at here, you can see primary sequence is neutral. I mean, we are technically in a downtrend, but the recent pullback kind of come into the area of crossroad, right? Which means that right now it's not really in a downtrend, it's not really in an uptrend, so it's a neutral. Expectation here is for price may have been completed a three wave, right? So what I mean by that, if you take a look at this, right, we have this low here and then market push up 1, 2, 3. So three wave is actually a core principle in Elliott wave. It's a complete set, right? Every time the market completed a three wave move, we tend to see some sort of a bigger kind of reaction, right? So what I mean by that is after this three wave, we can expect the market to actually start reacting to the downside. Whether is it correctively or this can just come back down impulsively, right? So whenever we complete a three wave move, and of course you can see here we add in some Fibonacci confluences. If you look left, you have structure there as well. So all this kind of built in to give us the context, right? And this is the part where right now we're gonna wait out and see how the market is gonna react around this zone, right? Because if this comes down correctively, then obviously we'll start to look for more upside. But if the market actually react impulsively back down, then we can see this as a wave 4 completion, and we can expect a wave 5 development to the downside, and therefore we'll then be focusing on bearish move. Okay, so right now we're at a crossroad, right? So the dollar index right now just be patient. Give it a couple more days, see how it's gonna develop before jumping in, right? Because the dollar index is basically in the neutral zone, euro dollar over here, kind of the inverse of it. Okay. So this one, we're just gonna be patient as well, right? Because what we're seeing here is we have this three-wave completion as well. The market is currently reacting from the FIB, from a three-wave, as well as the previous structure here. So we want to see how it's gonna turn out, all right? If we can get an impulsive bounce, then we can conclude that this three-wave is completed, and therefore look for more upside, right? Again, if this is just going to be corrective in nature, then we can actually see more downside for euro dollar, right? So how do we know? We really need to just give the market sufficient time to develop, and then coming back maybe another day to see what's going to plan out here. Okay, so you can see primary sequence neutral, expectation, price may have completed the true wave. We're at a key area. Okay, the trade plan here is just being patient, wait and see what's going to develop next, then only we go in, right? Just a quick note, right? If you look at the chart here on the right, you realize that I have a couple of things that are tagged. Essentially, those are the ones that are in my watch list, right? Those are the ones that potentially have something loading. Okay, but I'll run through everything here so that even if there's no clear setup, generally you know what to look up for. Okay, pound dollar, very similar. Okay, so what we have is the WXY. Price came into the 123.6 Fibonacci extension. We kind of broke that low. But just bear in mind, this can be a liquidity sweep, and the market can easily start going back up. So this is pretty much similar to the euro. We want to see how price is going to react here before committing to the buy trade if we get one. Okay, or perhaps even sell, right? If the market just do a corrective pullback, we'll look to sell. Okay, so for now, just be patient. Aussie dollar, we are generally looking at a short-term move to downside. The overarching trend is bullish. Okay, it's definitely an option, but we are expecting a pullback, right? We might actually tag the key level a little bit lower. The thing here is we get a very nice little 618, right? So, and then of course the market came down a little bit more. So what we are looking at is the possibility of a WXY that looks something like this. Okay. So if I can readjust that FIB, okay, probably something like that, right? So this is the expectation, right? The market may, if you want to see this, okay, you can see this as a diagonal, as a leading diagonal potentially, right? We have a little bit of a fake break here, change the corrector in terms of SMC structure, and then of course the market came down. Right now it's doing a little bit of pullback. Again, if this comes in as 1, 2, 3, as long as price respect this invalidation level, we can expect one more drop, right, towards a target around like 0.6320. Okay, so this one here, you can see the expectations for price to pull back, right? So if I do a little bit of adjustment is to 6320. The plan is of course moving forward, look out for a sell trade setup. Now what do I mean by sell trade setup, right? The idea here is today, if you kind of analyze and have a directional bias, right, which means like in this case here we're looking to potentially sell it. The directional bias is bearish because we're expecting this move, right? The next phase is after you get a direction, you want to have a setup, right? The setup is essentially telling you what are conditions that you can execute a trade, which price point to get in, which price points to put your stop. It's about the element of time, right? When in, when get out. So that is where we apply the SMC setup model. right? Based on certain conditions, when it hits, we can get involved in the trade, right? And then of course we have the context, right? The context is basically looking at the overarching chart and price point to understand whether this trade is a short-term trade or are you kind of trading in alignment with the overarching trend and direction, right? So this one, I'll be giving it maybe another day if we can get a nice little corrective pullback, towards like 6,440, 6,430. That would open up a short-term sell opportunity to the downside. All right, so that's on Aussie. Dollar Canadian, this one here, as of now, the structure is pretty obvious. Okay, we had this diagonal, we had the market kind of break through the diagonal, have potentially also testing the top of the diagonal here. Okay, and of course this is obviously impulsive late. If we can get a pullback, that would give us a buy trade opportunity, right? So we're essentially looking at this as a potential three wave structure, right? So this might take some time because of course right now the market is still near the top. We want to see some sort of pullback before we can jump in and buy it, right? So direction and structure is there, but of course timing wise, we want to be a little bit patient, okay? We want to wait for the setup to come to us. Okay. So yep, that's on this. In terms of dollar CAD, I'm personally looking out for it, right? But I think probably not gonna be a setup so soon. But the idea of this here, you can see, is if we get a pullback, okay, towards like this fib area, around 1.3840, that's going to be a potential buy trade to the upside, right? So we need the market to pull back a bit, right? So we'll see how it goes. Okay. Internally, it seems like this can be a 1, 2, 3, 4, 5. Okay, potentially completed 5-wave move. While the market may not necessarily come as deep as the 67, we'll assess it as it goes, right? But that's on dollar Canadian. Okay, then we have the dollar yen. Dollar yen here is currently testing the previous market imbalance zone, right? We call it fair value gap. Kind of completed that as well, right? And you can see very nicely structured WXY. So dollar yen here, we are generally neutral, turning bullish. Okay, if I zoom out a little bit, the market came down quite a bit. Okay, and this move up is impulsive in nature as of now, right? So the thing here is we are at a key area, right? So every time market enters a key area, it's kind of like at a crossroad point. Okay, it can either do one thing or another. And how do we assess that? We need to look up how the market is going to develop to give us the next clue, right? Because this can easily be a correction and then we can expect more upside, right? Maybe even going back and retest those top. Alternatively, what can happen is, of course, market can just reverse and then start to come back down. So again, as I mentioned, right, what is the likelihood of one happening against the other? It's really dependent on what the market would do from here on. Okay, so that's the part where oftentimes when you see the trade plan as being patient, it's really simply because we are a key area. We want to see how market is going to react before we can commit to the direction. Okay, so that's on dollar yen. Then we have gold. Okay, gold over here, we are expecting the simplest structure. Okay, which is basically just a three-wave move, right? So we have like 1, 2, and then we expect this to come down 3. Current target for gold short term here is for price to continue lower towards 3140. Okay, and then after which maybe outside. But for now, short term here is really expectation is 3-wave larger structure and then look for sell setup, right? Now if I bring it to gold, I just want to talk a little bit about this one here as well. Let me just remove this. We can see this as, okay, so depending on how you build your case, right? On the hard time frame building down, then we're looking at sell side. Okay, so if today we're looking at sell side, right, this is the obvious peak. The market came down from a low, pull back, and then we have a break of structure, right? Market break and close below that in this time frame. Then we continue to move lower, and then market pulls back from a low, and then it breaks through that low. Okay, so if you're looking at this time frame kind of structure sequence, what we then have is essentially this being a break of structure, okay, and this then being the hourly swing high point, okay. And of course you can also see here very obvious kind of a fair value gap, right? Market imbalance. Oftentimes the market will come back up over this area. And of course what we can also then realign everything is just simply put a Fibonacci retracement, and then we'll look at, you know, areas like 67. All right. So this can potentially build into a trade setup. Okay. So what I mean by trade setup is you can see, you know, all the conditions that I walked you through just now, right? Those are all the criteria required for a trade setup to be valid, right? And for us to execute a trade, the trade setup needs to be valid. It's not just about the direction, right? We are interested in sell, yes, but where to sell, where to limit your loss, you know, where to put your stop, where to put your target, when to get in. Those are the things you need to consider, and that's where the setup comes in. Okay. So if you look at this here, you know, that's where the opportunity comes. If today, you know, price can actually pull back towards like 3300, and of course respecting the swing high, then we can expect continuation down, right? So following the higher time frame, that would be the idea of it, right? Price can pull back and then come down to retest like 3140. Okay. So usually what you can do here is you can obviously just simply set a limit order, which means that if price tags it, come back and pull, you know, test your entry zone, automatically get in. Now if you don't like a pending style of trade, you can simply wait for price to enter into this territory, and then look for maybe a reversal candle. When the candle close, that's a reversal candle. You can then actually look to execute in at market, right? Whatever it is. Yeah, so that's actually a setup on gold that you can pay attention in. Okay, at least for the near term. Okay, then we have silver. Silver to me is not the clearest at the moment. Overarching direction is bullish. However, we are obviously in a range bound kind of environment, right? So I'm not really too interested in this, okay, for now, right? Because I just think that it's not a clear structure overall, right? So this one probably just gonna put it aside. Okay. Crude oil is actually pretty clear as of now in terms of the overall structure. We did came pretty close to where that low is, but we didn't break it. We kind of came close. Depending on how strict you are, I will personally just see this as a double bottom. Okay. But what's more important than that is you can actually see here on the, you know, smaller scale, we have this minor low got broken. And then the market instantly kind of reverses, right, and then close above this swing high. So in SMC model, right, this is what we call liquidity sweep break of structure. It's kind of like indicating a shift in direction. So the part here, while the overall sequence is bearish, we are actually looking for buy trade setup, right? Because we can look to trade, capitalize on an early trend reversal. Okay, so you can see this is pretty impulsive in nature. If you can get a corrective pullback, right, towards a key area here around 59.4, we'll naturally be interested to buy. Okay, so this one here, crude oil, right? If you go down to the lower time frame, there is that setup here as well, right? So you can see on the lower time frame, on the hourly, what we have is market put in low, Get that liquidity sweep, market break that high, came down from another low, continue to go higher, break that high. So therefore, this is our swing low. This is our swing high as of now, right? So if the market pulls back towards the 67th fit, again, if you just kind of like look left, that's where your period structure confluence is. That can be your trade setup, right? That can be an area in which you say, all right, market comes in, we'll be looking to buy there. I'll stop, go below that swing low, and our targets at where the swing high is, giving us a good risk to reward 1:2. Okay, so that's on crude oil. Then you have the S&P 500. U.S. indices has been recovering pretty strongly after that massive drop. So right now, definitely we're looking at bullish market, but you don't want to be buying at the right top. Okay. So over here, we may have completed some sort of a three-wave move, and we can expect a pullback. But overall, as long as price respect this swing low, generally you want to be bullish, and any corrective pullback can then be seen as a potential buy, right? It's just that right now it's near the top, probably not something you can get involved in. Okay. Then we have the pound yen. Pound yen here, we are definitely bullish. Price is currently testing the 618. For me, I'm looking at this as a possible 1, 2, and then of course this is wave 3. Once wave 3 complete, we may start to see some pullback as wave 4, and then we expect one more pushback up to wave 5, right? So this one here, the trade plan is basically wait for a pullback, okay, and just be patient first, because market is essentially testing that fib area, right, which is potentially the zone around 628 200 for this entire leg up, right? So this one probably just be a little bit patient and wait for a pullback before kind of looking at a buy side. Nothing much on this right now, right? Just be patient on that. Aussie yen, more or less the same, right? You can see the structure here. This can be what we call a potential leading diagonal. Definitely bullish at the moment, but you want to always wait for the pullback before you buy, right? You don't want to just like jump in immediately from here. Okay. Pound Australia, this one is also very clear in structure. This one is bearish. You can see from a high time frame, we have this consolidation, the market break it, pull back, retest, and we are kind of expecting more downside. Okay. Now, Pound Australia, we have a running trade already. Okay, this was actually last week, Thursday. Very nice little setup, right? You can see the market tag it and then kind of start to move lower. Basically, you want to shift your stops to break even at this point in time, depending on how you want to manage your trade anyway. But the setup is pretty clear, right? You can see over here. Okay, with this high, the market actually took out that high, but then starts to come down very, very aggressively, break that low, and then pull back, right? So as we break that low, what you observe is internally we have this low, market form this high, break the low, form this high, break the low, and then starts pull back, right? So this is where we take this as a swing high, and then we take this as a swing low, and we have a little bit of a market structure here, right, which kind of confluence pretty nicely with our fib. Okay, so that's where the setup comes in, right? We have all these conditions aligned. That is where we're looking to take that trade, right? So you can see here I'm using quite a bit of fibs, right? 67 entry, stops 100, hit profits. The bottom 1:2 risk to reward ratio. We just see how this trade is gonna pan out, right? And the idea, of course, is when you get about 1:1 risk to reward ratio already, it means the trade is moving in your favor. You want to have, of course, some sort of a management plan, shift your stops, or even trail it. Kind of protect that trade, right? Okay. So that's our pound R, right? Hopefully that's clear. Lastly, what I have on my list here is basically the Bitcoin. So Bitcoin here is bullish, right? Again, very, very clear. The expectations for price to make a pullback maybe towards like 99,300 plus. And short term, depending how you want to see it, you know, you can trade this pullback. If not, be a little bit more conservative. You wait for this to come down, then only you look for the buy, right? I mean, if you're conservative, obviously you want to follow the overarching direction, okay, and therefore you want to be like bullish buys. Bitcoin over here as of now in the lower time frame, it's not the clearest of all. We do have a structure, to be very honest, right? Let me just draw this in, right? You can see that. We have the condition of a liquidity sweep. Okay, we have the condition where this is a change of character, right? Where this swing low gets broken with momentum. Okay, obviously this is your minor order block. Okay, if you take FIB from high to low, we have that very nice confluence, right? Not only that, if you kind of take like this structure low here, get a break and close below as well. Okay, so to be honest, if you're into crypto, right, this is a valid trade setup that you can consider looking to execute. Okay, so align with the high time frame, you're expecting the pullback, right? And then on the lower time frame, you're kind of trading the pullback. This is where, you know, you can also consider, okay, if I'm expecting it to come back towards like 50% mark, which puts me at 99.30, okay, or 99,300 plus, I can actually look for extended target, right? Because this one here, I'm just looking at previous swing low. Risk reward is about 1:2. Now, if today I decide to bring it to like 99.3, 99.36, right? So somewhere, let's just say somewhere there, right? I would then extend my risk reward to like 2.8. Okay. So this is something you can do as well, right? To kind of like adjust for extended target. Okay. But if you're gonna just keep things simple, you know, just target that low, it's fine. It's 1:2. It's a very, very healthy risk to reward ratio. Okay. Yeah, so generally, again, if you kind of look at what I'm looking at for the week, right? The ones that are tagging rates are generally what's worth looking into. Hey, good. So I hope that's helpful, right? That's clear as well in terms of like what to look up for, okay, and things like that. Now, I also look into like intraday, okay, which is where the 15-minute chart comes in. For this, I only focus right now is the euro dollar. Right? I don't look at too many things. I only looked at euro dollar from an intraday perspective. And the idea here is we combine it with a 4-hour chart, right? So the 4-hour kind of gives us an overarching direction to focus. So in this case, you can see, you know, we have this swing high. We have this low. The market actually broke it. So that's formed high. This is the temporary low. And oftentimes after a break, okay, we expect the market to pull back. So if the 4-hour is going to pull back, then on the 15-minute, likely a reversal. You can follow that chain of thought, right? On the high time frame, if you expect the market to pull back, okay, that on the lower time frame, it's a bearish turns bullish, right? So it's a reversal come shift, okay? So if you go back to the 15-minute time frame, what we are seeing, obviously, you can see is coming down pretty aggressively, right? But over here, we start to see the part where we have like this low gets broken, okay? So that potentially opens up what we call a liquidity sweep on a 15-minute time frame. Okay, so 15-minute liquidity sweep. But how do we know that this is a liquidity sweep? Is the confirmation is when the market is able to take up this one here. Okay, let's just say M15 change character. If the market can actually break above this swing high, that's where we can confirm, all right, that's a liquidity sweep. We are looking at upside, right? Because why? This pattern structure would then indicate, all right, we are looking at a potential trend shift. Okay, So obviously today we don't get that, right? I mean, I don't think today you'll be looking at any possible setup. But tomorrow, if let's say by the end of today we get this break above that, giving us a liquidity trigger corrector, we'll wait for the pullback. Okay, because when that happens, we'll definitely be interested in the upside. Okay, so far in the current development here, we don't really have a very obvious fair value gap, right? Other than this here, which to be honest is not ideal. Okay, it's pretty low. But what we can still look out for is this can push higher. Right? We need that to happen. So when that push higher, we may also form some kind of a market imbalance there. And then of course the pullback would just be here, and then the market starts going. Okay, so we need to definitely see how things are gonna develop going forward, but that's the idea, that's the trade plan that I have. All good? Okay, any questions? Any questions that you guys have? All good, no questions? Hey, if generally there's no question, hopefully it's clear, right? And giving you some insights and ideas into like moving forward, what to look out for. Okay. Yep. So if there's nothing else, that's all that I have. All the best for the week, and I'll see you guys in the next session. Yeah.